Cashflow loans for small business. How to get an instant approval on a cashflow loan. Call 888-653-0124 today or click the link in the description to learn more. Most small businesses need cashflow loans to keep their operations running smoothly. They can't afford to wait weeks or months to receive approval on a loan. In today's economy, businesses need access to cash fast. That's why there are so many companies offering cash flow loans. Unfortunately, not all of them are reputable. If you're considering applying for a cash flow loan, here are some things you should know before you apply. Do you need a certain amount? The amount of money you need depends on several factors, including the size of your company, how long you take to generate revenue, and whether you plan to repay the loan early. Start by calculating your monthly expenses and then add 20% to 30% extra for growth. This will give you a ballpark figure. If you do decide to raise capital, it's best to find investors who understand what they're getting into. Investors should know how much money you need upfront, how you intend to spend it, and what return you expect. They should also be able to help you structure your business so that you achieve your goals without burning through all your cash too quickly. A short-term loan can help you bridge the cash flow gap. Cash flow loans are one of the most popular ways to fund growth in small businesses. They're easy to apply for, quick to process, and offer flexible repayment terms. But they're not without risks. Make sure you understand all the terms and conditions before signing anything. Business loan options vary depending on the lender, so make sure you check out as many lenders as possible. There may be other types of financial products available that could benefit your business. You should also take advantage of government programs like SBA loans. As part of these programs, you can get up to $2 million in low-interest loans with no credit checks. What are your monthly expenses? To calculate your monthly expenses, start by listing everything from rent to utilities to payroll costs. Next, add another 10%-20% to account for additional overhead costs such as marketing and advertising. Finally, add at least 5% more to cover any unexpected expenses that might pop up during the year. You don't have to list every expense. Just include those items that are important to the success of your business.
It's okay if you don't have exact numbers for each item because you won't be using the exact amounts when you apply for a loan.
However, make sure you're consistent between categories. Is a cash flow loan right for your business? What to consider? A cash advance loan might be right for your business if it meets certain requirements. The first thing to look at is whether your business has enough revenue to cover its monthly expenses. This means you should be able to show that you have enough cash coming in every month to cover your operating costs. It also means that you won't run out of money if you don't receive any new customers. If your business doesn't meet this requirement, then you may still qualify for a short-term loan. People who need to pay off debts quickly usually take these loans out, or they want to start up a new business. They often come with higher interest rates than standard loans. Businesses with good cash flow can obtain these loans. Cash flow loans are a great way to bridge the gap between slow periods and times when you need to spend money quickly. They're also a great option if you want to invest in equipment or expand your business. The best cash flow loan providers will offer flexible repayment terms, so you don't have to worry about getting into debt. Repayments should always be based on your income and not on your expenses. How do cash flow lending and asset-based lending differ? The best way to think about cash flow lending is as a bridge loan between bank financing and asset-based lending. It allows you to borrow funds from a lender who doesn't want to hold on to your assets, like real estate or equipment, and instead wants to see immediate returns. With this type of loan, you pay interest on the money borrowed, but don't repay any principal. Instead, you pay back the entire amount at the end of the term, plus any accrued interest. This means that your monthly payments will never decrease, even if your income increases. Call 888-653-0124 today or click the link in the description to learn more.